Hey man,
Hey, how are you, Marion?
I'm good. I'm good. This is our second live session. I'm loving this already.
Yeah, this is so the first time we were remote in London. Now we are across the sea, as our show usually is. Welcome to the Media Odyssey live stream on YouTube and LinkedIn. Those of you who are on either, hi, welcome. We'll be taking questions. Do post them, please. In a little bit, we're gonna banter here for 2 seconds because what are we doing, Marion, this morning?
So this morning we're breaking down Apple, Meta, Microsoft, and we may have an extra one that we're gonna throw into this thing.
Yes, one of my alma mater. In the last week, we've had earnings from some of the biggest companies in the history of the world, including Meta, Microsoft, Apple. Why don't we go ahead and jump right in? Let's start with the behaviors of the stock since the earnings came out. As of this morning, and this is not real time, but Meta is up, not double digits, but up generally. Comcast is up. Apple is either flat or a little bit down, and Microsoft is down. And we're going to be talking about why the market reacted to each one of these different companies' earnings differently. And sometimes, given the same information, they reacted differently to two different companies. So, do you want to jump in and start? Where do you want to start?
Let's start with Apple. I
Okay.
love these guys.
That's the most recent. That was just yesterday. Your takeaway on Apple's earnings.
I thought the results would be not as good as that, I have to say. So I was
Same.
actually surprised, right? Because if you look at revenues up 16% across the board, both service revenues and product revenues are up. I don't know. For some reason, I thought that with this whole deal with Google on Gemini, and also the fact that they've been under a lot of pressure when it comes to chip and the sourcing and the whole supply. Yeah, I thought we'd had worse numbers than that. So I was actually surprised, happily surprised. What was your take?
Same. I wouldn't say happily surprised. I was just surprised. The thing to know about Apple's earnings, though, is they were entirely driven by one word:
iPhone?
iPhone. Entirely driven by iPhone. The only reason Apple had a surprisingly good fourth quarter earnings report is because the iPhone surprised people. There was more demand for it than anyone
Yeah.
anticipated because if you look at the performance of it year on year for this decade, it's the best year they've had since 2021, which
Yeah.
is post COVID and people breaking out. It's the first time iPhone sales have grown year on year in 4 years.
Yeah.
So it's a real break against trend. So that's a good story for them. But there's two nuances to that. The first is most, if not all, of the increased demand came from China, which is not a market that's going to recycle its phones year after year after year. So, and they're just announced negative population growth for the first time. So that's a little precarious. And then secondarily, we are still at a time, all these years of services growth and you can talk about the services growth because that's where the interesting growth at Apple is. That's where the innovation is happening. But still, iPhones represent 52% of all Apple revenue in
Yeah.
2025. That's precarious for a company that's built on innovation.
Yeah, absolutely. And knowing that we live in a bubble, and I have an iPhone, you have one, but if you look, on the global stage, 3 out of 4 devices, right, are actually running under Androids. Right, so it feels like, and it's been that number for many years. So it feels like there's that glass ceiling for them, and they shared the number of active devices, right? So 2.5 billion, I
Yeah,
believe.
that's correct.
I
As
think this
compared
is,
to 7 billion, closer to 7 billion for Android. Yeah, but their big growth and their big profit comes from the services revenue. So not just subscriptions to Apple One or TV Plus and all that kind of stuff, but Google pays them $20 billion a year to be the search default on iPhones. That's in the services revenue. So it's an there is growth there, but it is not taking over as a truly diversified company. And that troubles me. I think Tim Apple buys himself a little time with these results, but I don't think this is a company that's innovating or growing really based on this report.
Well, if you look at the service segment, yes, it has doubled in 5 years. We're beyond 100 billion, right?
Right.
So the question now, no, we're 100 million. Oh,
In
how are we? I'm not sure
subscribers,
now.
you mean users?
No, the number of the service revenue. I think we went beyond 100, but I can't remember if it's billions or
So
millions.
in fourth quarter 2025, they did 64 billion in revenue, right?
That's
Oh, no,
yeah.
no, I'm sorry. No, no, that is Microsoft. I apologize. I apologize.
Mm,
So in fourth quarter, services revenue was 30 billion, and for the year, the services was 109 billion. The
yeah. So they went. Yeah.
first time over 100 billion. You are correct.
So that was yeah. I was 100% sure. But so if you look at as doubled, but we're looking at what around 13, 14%.
13%. Yeah,
Right, so
13% growth.
very far from those, initial days where they were, closer to 16, etc. And so that says a few things, right? If you look at the innovation piece, yes, they have the iPhone. This is that device that they're pushing every year. But Mac sales down, wearables down. They are making no moves whatsoever on the big screen, and to me, that is still, a big question mark on why they're not investing more with the living room.
Even their
I
cloud
do not
business,
get that.
even their cloud business is not really a business. It's just an add-on, right? And let's pivot to a comparable company. Another now the one of the largest companies in the history of mankind, Microsoft. They have you were talking about before we got on AI, Apple's lack of AI strategy.
Yeah,
They're buying their AI from Google, and we'll
yeah.
get Google's earnings next week, I believe. But in Microsoft, they're plowing money into AI and they're showing a return, 28% growth just on their cloud business, which is an AI business now. And yet they get punished day on day for their earnings report. Total revenue for the quarter was up 16%. Net income was up 60%, 59.5%. And yet, compared to Apple and Meta, Apple's overall performance was good, but it wasn't spectacular. Total net income up 16%. Total net sales up 16%. So why is Apple being celebrated and Microsoft is being punished?
I think there's a few things, right? So if you look at Microsoft, it is very much a portfolio business. And so when you look at cloud, yes, it went beyond the $50 billion. But I think I've read that, there's a lot of disappointment, so to say, as to, Copilot and their ability to actually transform all of those AI investments into actual, revenue. There's also, to me, and I'd be interested to understand how you feel about that. I think their investment in OpenAI is actually going to become a liability. They were the first to jump on. I think they have around 27%
Yeah.
of capital
Yep.
at OpenAI.
Of equity,
They
yeah.
get a cut
Yep.
on whatever OpenAI is making. However, we all know that, between what they're spending and what they're making, it's a massive sinkhole. So I think there's a bit of liability there, and also I've read a few tech commentators, and they feel like they're not moving fast enough on that front. So spending a lot of money, but not moving fast enough, and especially not transforming how the take up of AI-driven products within their portfolio.
Yeah. So that's the thing is, okay, you're right. They are overly bought into the AI bubble hype.
Yeah.
And specifically into OpenAI itself. And OpenAI is is at the center of this circular economy. They don't have the math to make their subscription business work. They are taking in investment from Nvidia and from Microsoft. Microsoft owns a huge part of them, and then guaranteeing revenue back to those other companies. And when that business model doesn't add up 3 years from
Yeah.
now, the whole thing begins to fall apart. The only thing I would disagree with you on is Microsoft is proving that AI is a profitable business for them. So Nadella himself said we are only at the beginning phases of AI diffusion and its impact on our company, and our AI business is already larger than a lot of our existing franchises.
Yeah.
So they're already seeing returns on investment internally there, either by cost savings internally, but more accurately, the stickiness of their Office products, and crucially, their cloud and infrastructure business, which is enormously profitable because they've already built it. It's to a certain extent sunk cost. They are continuing to build it and they are continuing to invest in it. And that's why they're being whacked by the market, is because they're really highly investing. But again, if you look at their total revenue growth, 15%, great. Their net income growth year on year for the total year was up 15% and up 60% in fourth quarter. So they like Meta, like Google, I think have the appropriate application of AI, which is
Yeah.
internally in a huge organization that's already using it to maximize revenue in advertising. Note what OpenAI announced last week,
Yeah.
an ad business. That's because they're seeing what Google is doing with their ad business and Microsoft is seeing as well. So I still don't understand why Microsoft is being punished by the market when Apple doesn't have an AI strategy and Meta is doing basically the same thing. We'll talk about Meta in a second.
So they've lost what? The stock went down 10%, and that's like over 300 billion, right? Lost in valuation. That's. It's true that it's enormous. Speaking about Apple, just a quick thing, because I've been thinking. We chatted right about the fact that they are lagging behind, and they've decided that they are not in the business of doing what Google and Meta and Microsoft are doing, which is to essentially build the infrastructure. And one of the reasons is that what they need is that they want AI on their devices, and they don't, and for that they don't need to have what the others are building. So in a way, licensing, borrowing, what others are, they've spent what, 1 billion back to
Apple.
Google for this. I think I'm thinking more and more now. Initially I was like, they're late to the game. I'm thinking more and more that it is a cautious move, because in any case, what they want to do with AI is relating to devices, because that their core business. You've said it, 52% goes to iPhone sales. Therefore, no interest in building all of that themselves. Would be way too expensive to do that themselves. They would need to go to all of those companies to use the cloud infrastructure. I think the business case would not work, and ultimately for a limited use case that is AI on device.
Yeah, I agree with you, but the problem is, let's put AI aside for a second. So as I said, AI is only going to be valuable not as a stand. You don't pay for email, you don't pay for search, and that's where AI is going. It's going to be your email and your search, or your agent to a certain extent, but it's very rarely going to be paid for bespoke as its own subscription. It's going to come in a bundle with Google shit or Microsoft shit or Apple shit. And there's a real argument to be made. Don't rent it, build it. But let's put AI aside. What Apple is failing to do is building out its other potential revenue streams. It still doesn't have an advertising business.
Yeah, yeah,
How is that fucking possible?
yeah,
So Apple's entire business is selling phones to rich people. We talked about the market share. So Apple has
yeah.
35% market share, Android has 65% market share for operating system. That's because Apple has chosen to only sell very expensive devices to very rich people. Period. That's their strategy. And their app sales, they represent 65% of app sales on Earth. Only 35% of phones, 65% of app sales. That's because they sell to rich people. The advertising business would be just as disproportionate. They would get higher CPMs because of the effectiveness of their environment and the quality of their audience. They would have an amazing ad business if they fucking built one. It's more,
They
it's
have
just,
one. They
yeah,
have
do
one.
they really though?
Well, the challenge, we spoke about the service segment, and as much as I love that segment, we don't know what's in it, right? Well, it's we know what's
Advertising
in
would
it,
be in there, but it's not
but
really growing that much.
well, it's in there, and but we have no clue, just like the rest,
Right. We
on
don't
how
know what
big
it
it
is.
is
Yeah.
and whether it's growing, yes or no. But I'll link to a piece because I did an article on their advertising business, but I have to say that until they actually share any data on what they're doing and how well it's performing, it's a bit moot to. So I agree with you. If we switch gear to Microsoft, one more thing, because I know you've been very vocal about gaming, and I was very surprised to see that it was nowhere to be found. Yes, if you dig in, but was there any mention about Activision and this
Thank you for
gaming
asking. Yeah.
division?
Yeah, no, they're not really, other than to kind of like, walk away from the results in that department. So their personal, they have a very complex reporting structure. Also, these companies go on fiscal years, which are all out of whack. I'm
Yeah,
usually talking about fourth quarter or full year calendar year 2025. And their more personal computing division, which is where gaming and Xbox are, and Activision Blizzard, which they bought for 60-70 billion dollars and finally ingested last year. That revenue that revenue was down 2.8%, right?
yeah,
For the quarter. For the year, it was up 8%. So it wasn't that bad a story, but it talks about there's actually it's been a reckoning in gaming, and in particular, um, you know, Microsoft has never, it's the third or fourth most popular console ever. It's never really been in the major console wars
mm,
with Nintendo and Sony in the way that it wants to be. And now it's much more of a software. 70+% of Activision's revenues comes from live gaming, not from console sales. And so you can still use a console to game that way, but it's not really where the industry is headed. So it does ask a lot of questions about that sector in particular. But if you look at this, I mean, this is a stock I think that will survive whatever bubble bursts in AI, and at when it dips, buy this dip. I don't take stock advice from me, but if I bought stock, that's what I would do.
yeah. So speaking about Meta, let's chat about Meta, right? Um, Very surprising to your point, the fact that they are spending a lot of money, even more so than Microsoft, because they're in this playing catch up thing, right? And so it did not impact their stock at all. So again, what is your thing? Is it because Wall Street thinks that whatever Meta is spending, because there's advertising on the far end of that, then it's worth it? Because so Apple this year 12 billion spent on that front. Microsoft looking at 82. Meta only 72, but they're saying that next year could grow between another 115, 135, which is like insane money. So what's your thinking about, why that business case potentially makes sense for Meta and, not Microsoft this case around?
I don't know. I honestly think that Zuckerberg is a better salesperson than
Mm,
Nadella. It doesn't make any sense. So their total revenue was up 24% for the fourth quarter. Total revenue up 22% for the year. Fine. But they had a huge increase in expense in fourth quarter, like
yeah,
massive increase in fourth quarter, and now they're doubling down on expense in AI in particular this year. And that was the announcement there. Meanwhile, their net income grew less than 10%, 9.2%. And that's not an awesome story, especially when for the full calendar year, net income at Meta went down 3%. And it's
yeah,
not because revenue didn't grow, it's because expense outpaced revenue growth. That is a really fascinating story that got sold and the stock went up afterwards.
yeah,
And I would argue that especially when all the investment is going into AI. He senses the moment there. Congratulations for him. Meanwhile, revenue is growing and net income is growing. Separately, though, in the same breath, Reality Labs, which has been this money pit for them over the last number of years, lost $6 billion last year, and they're basically now shutting it down. So the last fantasy land that he built us, remember when he changed the name of the company to Meta?
yeah.
Woo!
The
What happened to
metaverse.
the Metaverse Lab? That's Reality Labs. That is a that is a money pit. It's a dumpster fire, and he's running away from it. Meanwhile, net income at the company dropped 3% last year, and no one went after him on this. Same last thing I'll say on this. He says we're starting to see projects that used to require big teams now be accomplished by a
Mm,
single very talented person. There are massive layoffs coming at
yeah,
that
yeah.
company, and that's why Wall Street applauded him because he said this I have found the
Mm.
future of AI. I'm going to fire a shit ton of people this year.
Reality Labs, we could have shut down this thing 2 years ago, not even start this thing 2 years ago, right? So how much? I think they spent like 19 billion and made 2 billion.
Something like that. Yeah, yeah, yeah. It's a ridiculous. They lost a total of 6 billion over the course of last year, and I think they're signaling that they're shutting that part of the company down. That a lot of the
Yeah,
layoffs
that's
that have been announced are in that division.
that was my
So
understanding. So the only thing I have to say, but maybe that's me not knowing enough about AI, but I'm like, why? So are we saying that, all the business that Meta is running, advertising, all of that needs AI to run properly? So I'm thinking, ad targeting, recommendation, all of those things. Is that the reason why? And given that they do what they do, they need this thing to be, proprietary. It needs to be theirs and not, someone else's. Is that what we're saying?
that's all Meta you're talking about.
Yeah.
So crucially, think about so they have Instagram, WhatsApp, Facebook,
Yeah.
right? Now Threads, which is out bigger than Twitter, and think about the product, just the
Yeah.
product of those four different interfaces, and think about the engineering department of those interfaces.
Yeah.
The rated AI is going to be able to re-engineer those platforms in real time. Humans won't be able to accomplish it. And that's what he's literally talking about. There are other jobs as well that will be affected, but it's mostly in the coding, recoding, rebuilding, reversioning, A/B testing of all the various think about the billion. So you're talking about 3 billion users, 4 billion users across all their platforms in real time on different devices. So their ability to version those products and reversion those products increases dramatically. Part of that will be firing humans who used to do that shit,
Yeah.
and part of it will be increasing the pace and the rate of change. Mostly that will affect the ability to match audiences with ad targets in a
Mm.
hyper personalized way. The better they get at that, the more efficient that they get at that, the more they're already them Apple and I'm sorry, them Google and Amazon are now almost 60% of all advertising on Earth. Imagine when they get better at it. And that's what they're using AI for. They're not going to sell AI to anyone else. So there is an argument to build it in-house. There is also an argument to rent it, and that's Apple's argument. I
Yeah.
think Microsoft's right. I'm sorry, Meta is correct. They're going to want this in-house and be proprietary so they can really grade their own homework mostly.
Yeah. Yeah, that's exactly it. And when you look at the ad business, so we're talking plus what, 22% revenue, and you look at impression plus 12, pricing plus 9. Is
Pricing
that
plus 9 to me
yeah,
was actually one of the biggest data points. That's a
yeah,
huge plus 9%. That's
yeah.
amazing.
And so, what was your take? Right? Is that a healthy advertising business? Because we've seen, right, the year they've had in comparison to YouTube, who's played very heavily on longer form video, etc. Do we feel like they're catching up on that front, or are they staying in their lane, which is very much focused on SMEs and
Yeah, I mean, so there's two things to know about this. There's $13 billion in political advertising coming just in the United
yeah,
States, just for the midterms this year. So they're going to take a huge share of that. And so they're going to use that to build out their infrastructure. This is a very healthy ad product. This is going nowhere. If Instagram, as you've been saying and we've been saying, is coming to the television in 26, which I think is happening. They've basically announced that that this business only gets better. My only problem with this company is the level of expense against it. He tends to spend irrationally on
yeah,
things.
you love spending money.
And so, and the year's results, -3% in net income growth. That is a telling thing, especially now you have to look at the special purpose vehicles that Meta is invested in the AI hype bubble.
Yeah.
That's off ledger. That's not in these numbers. And that's why I question this company. That's it. This is going to be a great bet from an advertising standpoint for the coming year. But my question is, can he manage expense? Really, truly, he can fire people, but can he contain himself?
And so I'd love to take a few questions if we have some. We do have one from Bill. Hi, Bill. He says, did the product number grow? So, number of iPhones or just the revenue? Saying, because it's easy to drive revenue when your our iPhones are 1,000K a pop. Yeah, not even a
Yeah,
thousand, even more size.
shipments were up, I think, even higher than revenue. I think shipments were up 28% year on year. But again, when you look at, I published a chart this morning on LinkedIn that shows the revenue growth. I didn't do the units growth for iPhones over this decade, and it's been flat, but
Yeah.
for 2021 and this year. And so it's easy to grow on a kindergartner's height, and so that's what they've been doing. Their growth has been stagnant for years, and this was an anomaly, or maybe it's a trend, but we'll see.
We have Anthony asking, well, saying, right, that Apple takes a cut of whatever goes through, their app store. And they
Yeah,
made a claim earlier this month that they had 1.1 billion paid subscription. What I love about this is that, so little of that is actually their subscriptions. It is mostly, third
other
party
people,
subscriptions.
other
And
people's
what he's
subscription.
saying, what Anthony's saying is essentially, when there's inventory and they get anything that is passing through their doors, and so they should not bother and actually, build an entire advertising business on top. I don't agree with that. I do understand that yes, they're taking a cut on revenues being made, but around that ecosystem that they've built, there's a lot of value in owning that real estate, selling against it, etc. So I think they're passing a lot of money by not building this ad business. But would love to hear your thoughts.
I'll take a different tact on that. No, also though, now starting this year, I believe app builders are able to, onboard off channel to drive to different payment where Apple
Yeah,
will not get a cut of that. We'll see what kind of impact that has, but this is
yeah.
the first full year that's going to be in effect, and that will have an effect on both Apple and Google Play.
Yeah, but only a subset. Honestly, those who will make that moves are those who actually are not as reliant on Apple. So I'm thinking Netflix, Spotify, and others.
Yeah.
The rest of the world, and it is a big, big world. A lot of apps. All of those guys, they will not make that move, right? They don't necessarily have the money, nor the product teams to actually build a good off-platform experience, right? When I was at Roku, I had that, right? Apps were able to use Roku Pay or go off-platform. Let me tell you, Roku Pay on platform, they had first-party data, everything was in there. It's frictionless. There's a lot of value, and so when you do that, job of going around, I understand why they want to do it from a money perspective, but ultimately you're entering a zone where you're going to have a lot of drop off and people are just going to be like, forget about it, right? So I think this will be impacting them, but not to the extent that we think, because
Yeah, I agree. It's a
the
very
aggregation of all of those smaller apps, they will still use
The
it.
one
They
thing I
will
will
still be
point out,
using Apple.
the one thing I will point out is that both Netflix and Disney avoid it today,
Yeah.
and they've been very good at it. And so it is possible to do, even without the ease of doing it from within the app, which is what people will be able to do now. It's been very clunky to have to go to their website and sign up there. So it is possible to do, but I agree with you. I don't think it's going to have that major an impact. Can we
Yeah.
just talk about Comcast Cabletown
Yeah.
for 1 minute before we go? So they came out with their earnings. People reacted pretty well to their overall earnings. This is their last earnings with NBC's Cabletown properties inside it. So the
Yeah.
spun out version, and that stock is not doing well post spinoff, post IPO, I guess you would call it. What is going on with Peacock? So they have 44 million subscribers, so which is still adorably small. compared to all the rest of the competitors. They're losing more money now. I mean, it's improvement. What $2 billion loss last year versus a $2.6 billion loss the previous year. But why? Oh, and by the way, here's what I would watch if I was a Comcast watcher. Now that the cable networks, which is also the positive cash flow going out the door, broadband lost 700,000 users, customers last year. Their main core business is really under threat, and I don't understand what's going on at that company. Did you pay attention to their? I know we weren't necessarily slated to talk about them, but did you pay
Yeah,
attention
yeah.
to?
We wanted to have you wanted to have a fourth one in the mix. So when you say broadband, it's broadband only, right? So we're not
Yeah.
even talking about pay TV subs.
No,
Yeah, I
pay
mean,
TV subs, they lost 1.2 1.1 and a half million subs last year. So the video is falling off a cliff.
yeah.
Mobile went up a little bit, but they lost 700,000 broadband subscribers last year. That's a bad story.
Yeah, that's a very very bad story because what you've seen with all of these guys, right, is that cable, those numbers, right, they're bleeding subscribers, all of them, and they've done so for the last few years. They are feeling the cord cutting effect, like massively. But they were relying on the fact that they would go back and focus on their core business, which is to be utility, right? So internet and mobile. So I don't have an explanation for
What's
that.
the strategy?
Is it a price? Is it, I don't know. Is it the quality? You must be having a bit of a, price war in the US, right? If
There is.
everyone is
So yeah,
focusing again on broadband, that must be it. And then people are going to, the best, quality for money, I guess.
yeah. So there's a ton of overbuilders and then Firewire as well that is going straight to the home, and then there's 5G is just people are opting to use mobile
As the
over
main.
yeah. So it's a combination of a different things, but this is why both Comcast and Charter are actually having really not necessarily great quarters because of their main business, which is when you look at net income for Comcast, it was down in the quarter and for the year, and it's not a it's it isn't it was never the cable networks that was holding Comcast back. It's Comcast.
Yeah. So one thing on Peacock, you're saying, adorably small, etc. Why aren't they profitable? At the end of the day, they're spending a full lot of money, and they can only recoup it against one market. Yes, the US is a massive market, but the fact that these guys made the decision, unconscious decision a few years back, to not go international, they will remain a small player, and I don't see how you can make the math work with only the US. If you look at any of the other streamers, they're finding a way to spend the same amount of money, but have a way to recoup it by being global players. So massive, massive mistake a few years back to not go global. And I wasn't there, so I don't know why they decided to do
But is
that.
that why they're going after ITV now, do you think?
I honestly, I can I be honest, even if it's a group, I think this decision is very much a local decision. And
So
I think
Sky,
it's more like
it's about Sky and ITV. It's not about
exactly.
Comcast globally.
No, it's about
Interesting.
Sky and ITV that's going to change something at that level. Sky buying ITV is not going to make, Comcast and Peacock in a better shape to go global. Absolutely
Well,
not.
that's specifically about the ad market in the UK then, correct?
Yeah.
Because they're
Well,
not buying the studio, they're only buying the channel in the UK, which is
yeah.
entirely an ad-driven business. And so it's really adding that inventory and that ad selling ability to Sky, which, as we've talked about, is about 7-8% of total viewership in the UK.
Yeah, it's about, gaining, one of the biggest commercial broadcaster in the UK, the ad sales business that goes with it. It's a way for Sky to be not just a pay TV player, but a free and pay. So much like, RTL made the other move. Sky is
Right.
buying potentially ITV, RTL is buying Sky Germany. So everyone is trying to have that hybrid, and they should, right? Because if you look at the state of advertising, very exciting, but it feels like the pie is not getting any bigger. And every other week there's someone new, just like OpenAI coming and saying, I want a piece of that action. I want a piece of that action, etc. So yeah, I think that has nothing to do with the overall, Sky, Peacock, Comcast thing. Not going to change anything, but I could be wrong.
Fascinating. No, no, that's a really good take because we look at it again. We look at everything from this point of view, and from the American point of view. So it's always useful to see things from it isn't about America all the time as much as we would like to make it so. By the
Yeah,
way,
I love how you say we're always looking at it from this point of view. Which one?
the
Okay,
U.S.
the
point of
biggest
view, I know.
economy in the world. I
Well, we
get it.
talked about on the Netflix call. We talked about how I typically look at the Netflix deal as not making a whole lot of sense for the domestic market, especially from a subscriber standpoint. But we talked about how there is a pretty big upside across a number of different things, including sports and content writ large in Europe for the HBO library, the Warner Brothers library.
Yeah, that's why I'm here. I need to expand your horizons.
That's why you're here to teach me in particular. I
Well,
appreciate
kind
that.
of, hey, a bit of geography, widen
Where is
your
France? France is
horizon.
in Europe, right?
It is
I think we
absolutely.
have one more question that we can get to before we take off. Do you have it? Or I don't know
Yeah,
where to look. Go for
yeah,
it.
I will do that so
Thank
that you
you.
don't do this. Like, sorry, I'm making fun of you. That's what I do too. I do that too. Someone is asking. So, Manal, hi. Do we foresee any regulators globally stepping in and limiting the growth of ad revenues? Well, hopefully not. Because the way that I see it right now, I did a thing last week, right, on the state of advertising. And again, you were saying this year the ad-free viewer is going to go extinct. So we need business to continue. We don't need regulation to prevent and limit. Now, having said that, regulation can have, they can actually, without really meaning to do it, they can impair the growth in some cases.
Yeah. And so it's very interesting. Two things. One, all growth in media for the next couple of years is going to come from advertising. So if you look at the subscription economy, it's flat and it's probably going to stay flat. We are at peak subscription, partially because the population isn't growing. Take stock of that for a second. But then, secondarily, next week we're going to get earnings from Google,
Yeah.
and almost simultaneously, somewhere around there, we're going to get a judge's decision on breaking up Google's ad business in the US. And so I don't think it's going to be regulators or regulators per se. It may be the courts in certain circumstances, but the EU is going to have a lot to say about this as well. But in the US, it's going to be left up to, I think, the courts because there are no regulators left in the United States. Um, but I think we're going to see an interesting decision. I don't get a sense that this judge is going to break up their ad business too badly, but there's going to be an alteration to Google's ad business in the US, which will follow on around the rest of the world. Will that also happen to Meta? It's a great question. You've got two companies that control an outsized share of the advertising market on the planet, and it could be. It depends on who's in power, frankly.
I think one thing that we're going to see in Europe is a few years back, several mergers within commercial broadcasters did not go through because regulators thought, that it would be anti-competitive, that those new entities would be too big. So TF1 and M6 in France, etc. What we're seeing right now, you said it at the top that that four companies and four US companies have 60%, you said 60% of total ad revenues. So what I'm thinking now is that on the other side in Europe there's going to be more openness to let those local deals happen and be, instead of
Sky
looking.
ITV being a good example, yeah.
Exactly. Exactly. So MFE buying different commercial broadcasters in each market, and I think the idea being, let's stop comparing just TV channels with TV channels. Let's look at the overall ad business, and when you look at that and you compare the TV ad guys with digital and the big US companies, then you know your perception is changing, right? And perhaps you should be a bit more lenient and make those deals possible. So then in terms of regulation in Europe, we love it. So we'll have some things, but hopefully it's not to limit growth. It's to, empower, enable, and always in a very GDPR, privacy first, kind of way, which, we're good at.
Well, let me ask you a question because we still have a bunch of people hanging out. Thank you all for sticking around.
Yeah.
It's been great. A lot of fun to do this. We're going to be doing this all through earnings season, by the way. So get your popcorn ready, and they're going to be on a regular cadence. Stay tuned to this space. Can I take your opinion on something that has nothing to do with earnings season, but that's become a bit of a controversy in the last
Oh, I
fortnight?
think yes. So I was hoping someone would be asking. I think I know what you're going to be asking.
Maybe you do, maybe you don't. But
Okay.
the YouTube Barb
Yeah, of
argument.
course.
Okay, what's your take on it?
Okay. So I
I don't.
wanted to ask
I
you
am
to.
literally putting you on the spot. So if you don't
Yeah,
want
yeah,
to
no,
answer
and
right here,
it's okay. I wanted to do the same. So, two things for people who maybe have not seen, right? Because the UK is the UK. Not everyone knows exactly what's happening in the UK. But essentially, back in July last year, Google stopped subscribing. They had a deal with Barb. They stopped subscribing to access data from Barb. That was number one. At the same time, Barb announced a partnership with Kantar to be able to study, and it's a worldwide first, the top 200 channels on YouTube, right? And the goal of Barb with this was to try to compare apples to apples and being able to say, because disclaim YouTube is TV, you know what I think about that, all nice and well, but at the end of the day, it's very hard to compare what's happening on traditional TV, what's happening on YouTube, etc., etc. What happened this week is that Google sent a cease and desist letter to Barb and Kantar saying, guys, this product you've built is actually you're using our API not the right way. You're not supposed
illegally.
to use it this way. It's something that has to do with the audio recognitions, etc. So I don't know the nitty gritty, and it's alleged, right? So I don't know if Barb and Kantar have broken those
Well,
API
I think
terms.
there are two things to talk about here. The first is, and we'll touch about them, and we do have two more questions in the chat. But Kantar chose 200 channels, right?
Yeah.
Or Barb chose 200 channels to measure. They didn't measure all channels. They curated a range, a portfolio of 200 channels, and they disproportionately focused on kids content. So that was one of the, I think, knocks against the study itself. And then secondarily, the way they measured it was not necessarily an apples to apples view. So I think that is not YouTube's view of it. That is, we were talking to a mutual friend of ours on chat earlier today.
Yeah.
So it was a not really great way to compare 200 channels to all of television in the
Mm-hmm.
UK. And remember, it disproportionately weighed towards some certain titles, kids titles, and we talked about it on the show at the time, I think, or in
We
person.
did at the time. Yeah. But so
On the
can I be
flip side,
honest?
the idea that and then you have Barb announcing last week or 2 weeks ago that in total reach, YouTube had surpassed BBC on four screens for video in the UK in the fourth quarter of last year.
3 minutes, not 15. Yeah.
Correct. And so now we have a pool of data we don't know what to do with because it was not
Mhm.
necessarily the best look at the data. And then you have this larger cut of data, which has nothing to do with the first thing. Those two things are disconnected to each other, but the message is being confused. And you have kind of, no word from YouTube at the same time explaining exactly what happened. It's a very confusing moment for measurement in the
Yeah.
UK.
And so Barb and Kantar suspended the service. Of course, if you're receiving a letter from Google, you abide by that. Let's see what's going to happen next. I have to say that it's a very bad look on YouTube because they've spent the entire year saying YouTube is TV. We
I said
want
it
your
several
TV
times.
money. They've done
Yeah.
all of that, and right now, and I'm thinking two things. If they didn't like what they saw with Barb, then go back to Barb and go collaborate. But a cease and desist letter that tells me that they did not like what they saw, and I think it reflects poorly on them. They did not like that, and then they went into the nitty gritty of saying that it was against API terms. So honestly, what
It's
that
not a great. It's not a great look.
no, what that screams to me is we don't like what we're seeing. We're open, but to a certain extent, we want to control the data, we want to control the narrative, etc., etc.
To be
Except that,
fair to our friends at YouTube, including Pedro, Pina, and whomever else is listening to this, that's our interpretation of it, But it
yeah,
is that when you talk to other folks in the industry, and we should talk to them. And I don't want to out somebody I was just on WhatsApp with. about this, but they brought up those, why is it only kids programming that they
Yeah.
measured in the YouTube thing? Remember that the cease and desist was not on the total measurement of YouTube compared to the rest. It was on these 200 channel measurement thing.
That
Right.
specific thing. Yeah, yeah, yeah. But I
Cool.
think the only thing I will say is I'm not sure this is the way to go. I would have, but who knows? Perhaps they had exchanges, couldn't find, a satisfactory solution to tweak that product, etc. I have no clue. So, but I have to say it's not a good look. And what it says, and it's a bit depressing, I have to say, is that we spent 2025 seeing a lot of cross-media initiatives. What I'm thinking when I see this, regardless of what really happened, is that we're very far from the moment where we'll be able to do exactly that. And that the reason being that, the big platforms, it's not in their interests.
I think we'll wrap it up there. Thank you all for hanging out. This was a lot of fun. A decent number of you showed up on both platforms. We're going to keep doing this all through earnings season. This is the Media Odyssey live earnings season's wrap up. We'll be back next week with Google's earnings and some other stuff as well. Anyone
We're
else?
doing Disney Plus. It's next week on the 5th.
Disney.
Oh yeah, no, Disney, my bad. I had Disney in mind and said Netflix. Sorry, guys. Disney Plus, it's on the 5th. It's an early one. So 2 p.m. CET, that's an early one. And guys, just so you know, for those who were not able to catch the beginning or they want to go back, we're going to push this on audio platforms. You can watch it on YouTube, anywhere where
And
it
here
typically
on demand
gets.
later too.
Yeah,
Yeah.
exactly. So
Thanks so much for joining us. We'll see you next time.